Tradingsim, the #1 market replay platform in the world, where you can learn to trade like a pro at your own pace.
Welcome to the Trading with Pivot Points webinar, hosted by Tradingsim.com. My name is Al Hill. I'm the co-founder of Tradingsim. I'll be walking you through this trading strategy over the next 35 to 40 minutes. So grab a cup of coffee, make sure you're sitting upright so you can take in this wealth of information and get ready to open your eyes. All right. Before we go any further, I just want to say my disclaimer up front that this webinar is not a solicitation to buy or sell any securities. And before you invest, please consult with an investment professional. All right, again, my name is Al Hill, co-founder. There's a great picture of me smiling. I have over 20 plus years of trading experience. I also have 20 plus years of systems development, so building complex applications, one of which is Tradingsim. My trading strategies and commentary has been featured in Traders Magazine, Mint.com, Trading Setups Review, and a host of other publications over the years. So let me just be clear up front. Who is this webinar not for, right? If you're a long-term investor, feel free to hang out and just kind of take in this information and see if it's applicable. But the strategies we're going to lay out here are for short-term investors or short-term traders, right? So these are going to be people that either day trade or swing trade, where you may hold a position, for a day or a couple of weeks, maybe a month at the most. But this is not this strategy is not geared or tailored for investors that are looking to buy and hold for 5 or 10 years. All right, so who is this webinar for, right? So as you can see here, it's really for almost anyone, right? Beginners, right? I'll give you a feel for how to place trades, how to place your stops, where to place your targets, right? For day traders, you may not even think of pivot points, okay? This may be a new concept for you, but pivot points is really anchored in day trading, and it goes back many, many years. Okay, swing traders, the pivot points are based on daily levels, right? So daily pivot levels. So that is of importance to you. So it's not so much at the micro level that you're looking at like minute charts or 2-minute charts. It still is applicable for you. For small account holders, this can show you how you can, again, place quality trades to take that small account to a large account. And again, for me, the same way that I've traded for the last 20 plus years, this can be extra income for you, right? So for a person that maybe you just want to cover your car note, or maybe you want to cover your mortgage, or maybe you want to put money aside for a family vacation, right? So this is for those extra income seekers as well. The webinar is broken out to 8 sections. First, going to walk you through what are pivot points for those of you that are not familiar with the indicator. And then we're going to go all the way down through money management, stops, you name it. Last but not least, we are going to have a bonus offer that I mentioned at the end of this webinar. So please make sure you get to the end so you can hear about that special offer just for webinar attendees. Okay, so pivot points. Pivot points, think of them as levels. Okay, really simple way of looking at it. 7 levels. All right, the pivot points as an indicator or a technique goes all the way back to the floor traders. Even before electronic trading, there was a way that traders could quickly see psychological support and resistance levels based on the prior day's trading activity. Okay, so it wasn't looking back 2 weeks, 3 months, 6 months, or a year. It is specific to the most recent trading activity. So if it was really volatile the day before, well, those pivot point levels are going to be a little wider, a little further apart the next day. If the trading range was super tight, then those pivot points are going to be pretty tight the next day, right? So it's really based on the prior day's action, right? The thing I really like about pivot points, and I want to highlight this, they're set at the beginning of the day and they do not move. Okay, so for those of you that have tried, like myself, Elliott Wave or Gann or trend lines where you may have connected the wrong bottom or the top, you may have had the wrong angle, right? And so now where you think there's a level, it's either moving on you in real time with Elliott Wave, or the indicator itself is changing. You had a sell signal, but then the sell signal changed on the next candle, and now you're in a stock and you should not have shorted at all, right? We've all had that frustration. What I love about pivot points, again, they're set in the beginning of the day and they are fixed. They do not move. Okay, so clear levels. There's going to be the black line, which is your neutral or the pivot point itself. Then there's 3 resistance levels above and 3 support levels below. That's it. Just remember 7 levels. Now, once you get to a more advanced state, you can create, 4 or 5 support resistance levels. You can create pivot points based on Fibonacci. I mean, you can really go far with it, but for now, we're going to keep it simple, 7 levels. All right, next up. Now, this is for all of you mathematicians or analysts out there like myself that have to see the data, right? It is not critical for you to understand how pivot points are calculated. You can trust that, like Tradingsim, right, is going to perform that calculation correctly, right? So there's no need for you to get into the math. However, if you're like me, you at least want to see it, have an understanding for it. So the pivot, which I'll have you focus on first, is a combination of the high, low, and close of the day, right? So regardless of whether you use Fibonacci pivots or you add extra pivot points, it all comes down to this one data element, the pivot. From there, you calculate your supports, like for in this example, which are all the S1s, S2, and S3s, and resistance, which are your R1, R2, and R3, right? So again, if you want to just pause here and just kind of take this in, you can. Or you can just, again, just hear my voice, know that it's there, and you can always come back later and study it. But the key point is that the pivot point is your anchor. There's 3 support levels and there's 3 resistance levels. All right, so how to set up your charts. The first thing you want to do for you beginners out there, you want to set up your chart, right? So you need to do 3 simple things. Select the chart type, select the chart time frame, and we want to add pivot points because that's what this webinar is all about. So here we have the Tradingsim application. And again, going back to the prior slide, we want to do 3 simple things. So first, we want to select the chart type. Okay. Now, for many of you, this chart type should be very familiar. It's the candlestick chart type, which is the most popular right now, I believe, across the world, quite honestly. Back in the 80s, line and bar graphs are pretty big. If you go back even further to like some of the original Western technicians, they were using point and figure charts. So we have all of those within Tradingsim, but for this example, we're going to stick with the most popular chart type, which is the candle or candlestick. For the time frame, since we're looking at an intraday view, right? I don't want to go too far out. We're looking, at 1 hour or 4 hour. For those of you that swing trade, that may be useful for you. And I don't want to go to like the 1 minute, 2 minute, because that's like really fast and more for penny stock trading. For this example, we want to get somewhere in that sweet middle spot, if you will, at the 5-minute chart. And last but not least, we want to add, of course, the pivot points, which is the entire purpose of this webinar. So we're going to click our indicator icon here and add pivot points. All right, and as you can see, as we mentioned before, black line is your pivot point. Then you have the 3 lines above as your resistance, 3 lines below as support. And right now, the chart is configured enough for us, right? We're not going to add a ton of overlay indicators or off-chart indicators or oscillators. We want to keep the chart pretty clean. As you can see with pivot points, it can look a little busy. I'm not going to deny that because there's a lot of lines there. So we don't want to add too much information to the chart to create that sensory overload, right? We want to kind of keep it as simple as possible. Now that we have our chart set up, and we have the pivot points as well, we have to think about what are we going to trade. On any given day, you literally have about 11,000 plus, options to choose from. And that's just equities and ETFs, okay? There's an endless amount. So you have to narrow that down. You have to say, okay, there's this entire universe of opportunity here. How do I focus it? How do I prevent myself from over trading or just getting involved in stocks that do not fit my, trading profile, my risk parameters, etc. So to kind of get this a little more narrow so we can focus, because you can apply pivot points literally to any setup, right? It's an indicator like any indicator. So for this webinar, we want to focus on the red to green pattern. The reason I like that, it is an easy pattern to identify on the chart. It's not like, a triple top or double bottom or something related to trend lines, right? Or some complicated count. It's really simple. Stock opened up at a certain level. It has dropped below the open and then has a resurrection of sorts and is able to come back up and get into the green. That's it. Opens up, drops, goes back up again. Now, for the examples I'm going to talk through and the ones I think you should look for are stocks that are still up for the day even when they're going down. So what does that mean, right? That means the stock had to have gapped up, for example, 6, 7, or 8%, whatever the number is, pulls back 3 or 4%, but it is still above the prior day's close, okay? It never goes truly in the red, if you will, but it's down on the day. It then comes back up and goes out through that high. So those are the red to greens we want to focus on, not necessarily reds where they go below the prior day's close, okay? We don't want to focus on those right now because, again, we want to narrow it down. All right, the setup. So we're going to talk through a stock, FET. You can see the entire trade set up, right? So there's not going to be any surprise in this, but the art is going to be us dissecting the ticks, the entries, the exits, the targets. That's where the magic's going to happen, okay? So left to right, pull back to support, all right? You can see the stock FET gapped up, strong on the open, immediately gave it up, okay? Falls back down, but never goes red. Again, I want to stress that. Never goes red from the prior day's close, but it is down from the open, okay? Down from the open. It then pulls back to the prior day's resistance level, right? Where there was a huge congestion area. That creates support. It then starts to consolidate at that support in the second image here. That consolidation then leads to a run up and it breaks for a new high. The key thing I'm highlighting here is that it breaks for a new high before a lunch, right? You don't want things to not make a high before lunch because you have to wait until 1, sometimes even 2 o'clock to see if the stock's going to break the high. And what I've seen over the years, if the stock is unable to breach its high before lunch, there's a low likelihood it's going to do it later in the day, right? So there's 100 stocks that make a high in the morning, maybe only 10 to 15 of them will extend higher by end of the day. If that number is ever tripped, meaning there's more than 10 or 15, it's because the overall market starts to rally. But for the most part, that morning high is kind of set. Short sellers come in and then just people battle it out during lunch, but there's no real clear winner, okay? All the juice is gone from the morning. All right, so if you get that break of the high before lunch, the next thing you want to see is follow through, right? It's not good enough just to break the high because, like many people, they buy the low and then they sell the high of the day, right? And this happens all the time because people are looking to say, all right, where can I get out? Where is there congestion of order? So all the people that bought in here, right? They got that hedge fake on that first bar. The minute they're even, they're going to want to sell out. So the smart longs, as you call them, that buy the weakness, they're going to sell out here the minute it gets back up there. What you don't see here, and I have personally been through this, but you can't reflect it or see in the chart, it's the emotional pain that goes on. If you buy in here, when you're down here, your heart's racing, you're thinking, oh no, this thing breaks down, it's going to go back to the low of the prior day. So the minute you get this run up, you're not thinking about the next leg up. All you're thinking about is getting out even, right? So while you can have this red to green pattern, again, the key is you want to see follow through because there is going to be some level of selling pressure. There will be some level of selling pressure you encounter on the retest of a daily high. All right, so let's dive into the entry for the trade. Now you've seen how the trade plays out, right? You saw we had the skyrocket in the morning, the skyrocket up in the morning, instant, roll over down to prior day resistance, which became support, shot back up again to the high, and then you had a little bit of a retracement, and then you have follow through. So you know that. But now we have to figure out, how do you trade this setup, right? How do you actually make money in this setup? So now we're going to go over to Tradingsim to walk through the entry of the trade. All right, so now you're in Tradingsim. We're going to walk through the trade. And this is the beauty of Tradingsim. It allows you to see the data printing as it actually did in the market, not refreshed every minute or 2 minutes, refresh multiple times per second, real tick data. You're going to feel like you're actually there in front of the screen. All right, so let's go ahead and fast forward this a little bit, which is another feature. That way, if you want to sit there all day and you really want to have an immersive experience and go 6.5 hours, you can. Or if you say, you know what, I want to condense a full day's trading session down to 30 minutes, you can do that as well. So for this demonstration for FET, we're going to do 1 minute per second. Now you can see FET even had a little bit of a delay on the open in terms of when the stock actually opened up, right? And so that may have been the reason that there was a drop off. Okay, now that's something, again, you would not have been able to see in a static chart, but you can see when there's real data streaming. All right, now here we go. We're coming down to this support level here, right? Finding that support. Now in a red to green play, you want to buy above the high, right? Really simple, you would think, but not quite. The reason being is when you're trading, you want to look for resistance levels and hidden resistance levels. That's where the pivot point comes into play. Without showing the pivot points, you would think that, oh, they may just buy this high, right, at 544, okay? But in reality, the level is really 546. That's the level you really want to see break, because that's that pivot point level. And even beyond that, after I've been trading pivot points for quite some time now, you don't want to hover or place your order directly around that pivot point level. You want to go a little bit above, because what happens, kind of going back, and let's pause the action here for a second. Going back to what we said on the prior slide, traders will store their sell orders right at the high of the day. It'll tick over by a little bit. And what is that? Why does it do that? So I always say, why does it go up just a little? Well, reason being, okay, you're going to have short sellers that place shorts right here. Once it comes up and it breaks, what are they doing? They're covering, right? Because the short seller was hoping that likely the stock would break down, FET would break this gap and go lower. Well, it didn't do that. It's coming back out the top. So at this point, their risk is unlimited. They're short. So the smart short sellers are going to place their stops right here, which will generate that little pop up 1, 2, 3, 4 pennies or so, right, of just orders filling at market, the stock market orders that are pushing the stock higher, but there's no real conviction behind it. So that's where you'll get that rollover, where ultimately it looks like it's going to the moon and they'll roll over, which is why when you're trading with pivot points, you don't want to just look at the high, right? Because that's where they get you at 545 per se, right? Per se, at 545, for example, right? Which is exactly what this did. Hit 545 and it starts to hit trouble, right? Stock starts to roll immediately. Now, this is where, for me, my heart starts to race, honestly, if you buy in too soon, because you're thinking, oh no, they top ticked me, right? I'm one of the poor souls that bought in right when this thing's topping out, which is why you never want to rush into a trade. You either want to buy low here, right? So you have this much room to give up on a pullback and kind of see how things play out. Or another move you can do if you want to buy the breakout, which is the purpose of this webinar. So another idea, if you want to buy the breakout, right, of a stock, is to utilize the pivot points. So you see here, and this is not reflected on the chart, the pivot point level is 546. This is the resistance level that you need to clear on the pivot point. You don't see that. You hit 544, first bar today, failed. Hit 545, looks like you may fail again. Now, if you were just going purely off price, you would have bought it at 545, you may have gotten top ticked, right? So what you want to do, you don't even want to really buy it at 546. You want to give it a little room, like 548, even 549, okay? Just to make sure that if it's going to break, it has some conviction, right? You're not sitting there wondering. You're saying, okay, this thing has kind of gone through that level cleanly. So for us, we can put in a stop limit order, 548, and just do 100 shares, okay? So now you see our order sitting out there, and you can zoom in and you can see, okay, well, this is, this is slightly above that pivot point level and the price action, okay? Slightly above it. All right, let's go ahead and hit play. And you can see now it's starting to recover. You're almost getting like a cup formation here, like a cup and handle. All right, so at this point, it filled us, right? And not only that, you had immediate follow through. You see that follow through, right? Let's slow this down a little bit. That follow through was amazing. So you closed above both the pivot point level and price, high of 545, and the pivot point level of 546, held it, and then went higher on the next bar. That is a sign to you that the stock is likely to go higher. It's a positive sign. So again, for your entry, you want to make sure the stock is down from the open, but is not below the prior day close. You then want to see a resurgence in price that is able to clear the high of the day, as well as the pivot point level. So not just the red to green chart pattern, but also the pivot point. Lastly, you want to put your buy order slightly above the pivot point and price action to ensure you're not caught in that little pop that happens when the shorts are getting squeezed and trying to all get out of their position because they've crowded all their stops above the daily high. All right, so that's your entry. Now that we've covered our entry, the next thing we need to talk about are the stops. All right, where do we place our stop? Back over to Tradingsim. So when you're trading, a lot of the education, whether it's books you read or articles you find on the internet, they talk about the patterns. They talk about the possibilities of the money you're going to make. But what's really going to separate you as a successful trader versus someone that goes through years of frustration and struggle are your stops, right? Your ability to prevent large losses, right? So not even necessarily blowing up your account. And you've probably heard of that term where someone makes a really awful trade and account drops 80%. That doesn't happen to people most of the time. What happens most of the time, it's a lot of bad trades and a lot of good trades, right? Kind of half and half, right? But the bad ones are really bad, where you're taking sizable hits to your portfolio, your account. That is what leads to ultimately your account dwindling down and you wiping yourself out of the game. So the key is not always focusing on the targets, right? Because you don't know what's going to happen. Anyone that tells you that they know, they're selling you a story. When you buy a stock or sell a stock, you have no idea what's going to happen because anything can change a pattern, a target, if the right woman or man comes into that particular security with enough cash, they can move it. So you never can predict anything 100%, which is why you need your stops. So with this sort of pattern, you really have two options. You can place your stop. Let me just pause the action for a second so it doesn't get too far ahead of us. You can place your stop directly below the most recent low, right? After the breakout here. So you're looking at 533, right? With an entry price of 548. So you'd have to decide, okay, Is 15 cents the right level of risk for me? Is that too much risk, right? So that's something you have to decide as you're looking at the types of stocks you're trading, right? You may want to trade, low volatility, pricey stocks that don't move this much. But the point is, you want to look for a swing low as your stop. If you want to really open yourself up to more risk, right? But again, that should be commensurate with the amount of reward you're seeking. You're going to place your stop below the low of the day, right? For me, I don't go this far down. It's just too much profit to give back. And you need to make sure that you don't get in the habit of making and then losing, because psychologically that can work a number on you. Okay. All right. So we want to place our stop directly below the low of the candle at 532. So we're going to go 531 to ensure, the losses don't mount up against us. Again, you want to have your path, you want to have your clear strategy and plan for exiting the trade, whether it goes in your favor or against you. So let's do 531 right here. Again, you're doing a stop market order, so the market will stop you out and sell. And now you can see the order right there on the chart. Okay, so again, it's all about protecting what you have, right? And before we go over to the targets, how to set the targets, let me just quickly review. You have a couple of options here for stops. I've highlighted two, but there's actually a third as well. There is the most recent swing low. There is the low of the day. And then you can also do the pivot point. So you can say here at the 513 mark, right? This resistance level, which we were able to get back above, if it breaks this, okay? Now it's all choice. It's all up to you. You have to assess it, and this is where it gets hard. And I'm not going to mince words around it. This is where it becomes difficult. This is where the practice, the hard work, putting in the time where it matters. You're going to need to know, based on the type of stock you're trading and the volatility of that stock, does it make sense to place a stop here at the pivot point, or at the low? You have to do your research to know the optimal stop placement. There is no unicorn with this. You have to literally put in the work, and that's what Tradingsim allows you to do, to come in here, put in the hard work, and practice without risking a dime. But that's the power of it. And you're not going to get that from looking at static charts. You're going to get that from hitting play and seeing how stocks move, understanding their movement. And once you understand how stocks move, you will intuitively know, without even having the rules, you will intuitively know where to place your stop orders. All right, now it's time to talk targets. Where do you get out? And one thing that's tough in trading, whether you're new to trading or I've been trading for many years, knowing when to say enough's enough. Okay. When do I take the money out? Is it based on an arbitrary target? Is it based on some forecast? Do I scale out of the position as it goes in my favor? Any and all of these may be the right response, right? So in this example, we're going to walk through how to set your targets using pivot points. And then in the next section, we'll get into money management, like how do you effectively manage your money as you're going through this trade? All right, so let's go back over to Tradingsim. So one of the first kind of obvious targets is the next resistance level up. Now, I've been able to make money doing this, right? And you can make a decent living doing this. But the thing you must do if you take this approach, you must be comfortable knowing that the stock may exceed that resistance level and go even higher, right? So you have to just within yourself, and this is where the psychology comes into play, you have to just take a deep breath and go, you know what? I just made money. I just provided for myself, my loved ones, my spouse, my family, my friends, whoever it is you support, right? Your foundation you give money to, whatever matters to you. If you're the kind of person you're going to come back and say, oh, I should have made more, and you're going to start to chase, it's going to get ugly pretty fast. So you have to be content and you have to be sound in what you're doing. So if you are the type of person that says, hey, Next level up, I sell. Well, in this example, you're selling at 565. Looks like that's the next resistance level up, right? Yep, 565. This line right here. Now, an approach you can do with selling at that level, similar to how, you may have a stock tick over the level. You can put it at 566, 567 in hopes of getting that pop, where there's, again, short sellers that are exiting because the stops are there. There's also going to be longs there that are going to be selling similar to you. So you have to make that decision, but anywhere in or around that next pivot point level up, you can exit the trade. Okay, now you may be saying, all right, well, I count, 1, 2, 3 pivot points. That's it, right? How do I sell? Where do I sell above that, right? Like, I don't see anything else on the chart. And that's another bonus that I didn't list out in the beginning. So hopefully you've listened up to this point because I've saved this one, kind of hitting it away a little bit. But this is where you have to combine another projection tool, which is Fibonacci, right? So one thing that I like to do, I like to see both my Fibonacci levels and my pivot point levels telling me the same thing, right? It's a validation point, okay? Another way of saying is confluence. The more confluence you have in the market, the higher likelihood that what you're seeing may come to fruition, right? So let's say you're thinking, okay, I want to hold this a little longer, right? These 3 candles look pretty strong to me. I think it's going to go higher, okay? So one thing you can do is you can take a look at the swing high from the morning and then the low prior to that run up and use that as your range to then project how high the stock can go. Okay, so you come over here to the Fibonacci retracement tool. Click here to select the high, come down to the low. You can come in here and now you see, wow, there's 138.2% extension right at the R3 level. Okay, so you're hitting resistance right at the 138.2. But then you can look and say, okay, well, what's above the 138.2? Well, there's a 161.8, and that's at 586, right? So now a trade where you enter in at 548, you have the possibility of making 586 on it. So let's see how this plays out. We can do 5 minutes per second just to kind of zoom through this here. All right, so let's pause that. So you can see at this point, FET was able to hit its 161.8 extension, okay? And, we were fast forwarding here, so we can go ahead and just close this out. 602 is the last, entry 548. I mean, that's, pretty decent return. Boom, out of the trade, sold 100 at market, 602, right? Hit play here just to let this run out. And so now you're out of the position, take the stop market order off, right? So now you're out of the trade. Now, one thing to note, if you could see that action, and we were on a 5-minute replay, you can kind of feel your stomach turn in here, right? When you get up to this point, 580 doesn't hit it. Then it rolls over, comes down to 562, right? And you're, okay, well, what do I do? What do I do? That's the reality of trading. You're constantly asking yourself, do I get out? Do I stay in? Right? Now, one point to highlight, as the stock is moving in your favor, you don't want to leave your stop down here, right? That 531. You want to move that up. Okay, so now you want to move up to the low of 548. Then you want to move it up to the low of 556, right? You always want to move your stop up. The last thing you want to do is place your stop out here and just put the blinders on and swing for the fences, because more times than not, stock's not going to trend like this. It's going to go up instead of, like, it may even stop here. Call it 580, 580, yeah, 580, and it could have just rolled over. And instead of going back up, tank all the way down. I've seen it happen a million times. So you have to ensure, if you're spending your time dedicating, all this hard work to mastering your craft, don't give the money back, okay? Move your stops up as the position goes in your favor. Now, in this case, I mean, it really went in our favor, but again, it's not always going to play out that way. So you have to be prepared. That's where proper stop management and clean targets of when to get out, where that comes into play. All right, money management. You're going to have a million people talk to you about charts, patterns, technicals, and they're not going to touch on this. This is important. And I think far too many people think of themselves as just technicians or traders. You're a money manager, and you may only be managing your money, but you are managing money. You are doing this to make money. It's not like other professions where you do them necessarily, for some other intrinsic, like, or intangible feeling or thing, right? You're in your computer. You're not talking to anyone. You are literally, it's you against another human being, and you're looking to win. So you are in this to make money. It's not like other careers. If you walk away, you don't make money, you're not doing your job. You are in this to make money. So let's go back over to Tradingsim and look at some money management techniques. All right, back over to Tradingsim here. So there's a number of things you can do here in terms of money management. First and foremost, right, you can scale in two positions. Now, me personally, when I go in, I go in. I don't do a third or a half. I go all in terms of placing my entry. I tend to, wait for entries like here. I give it a little room, right? I'm not hugging that level. That is me playing the conservative role to see if it really has juice. So at that point, it's time for me to show some conviction. For you, you may want to scale in half of your position and then see how it performs, and then add to the stock as it goes in your favor. Totally up to you, right? Another option is, and this is something else that I do in certain stocks that are extremely volatile, I will sell until that first big push of strength after my entry. Okay, so that way I know I've locked in some profit. So if it comes back down again and breaks the stop, I'm walking away with something. I'm not just going to go out break even. Lower volatility stocks, I mean, you could truly just hold them and let them run, let them do the work. Because if it starts to go against you, you will have time to react, because they're not like just tanking or moving as quickly as penny stocks. But for those of you that are trading in those high flying penny stocks, you want to sell into strength, just because the volatility is so great that there's no pivot point, Fibonacci, candlesticks, or anything for that matter that's going to stop that stock from doing whatever it wants to do. And when they move that quickly, you have to move quickly. Okay. The other key point is, you want to make sure that when you're going into positions, you don't go in heavy, right? So think about trading more on the long game, not necessarily trying to win it all in one day or even 1 week. Think about a target, a 6-month target, then break that down into weeks, then break that down to days. Just make sure that you're looking at the market, not necessarily just from charts and patterns, but how you actually make money and keep money in your pocket. So let's say that you hit your target, your 602, like we did in this example, and made quite a bit of money, right? That may be your target for the entire day. At that point, you may say, I just want to stop. I don't need to do anything else, right? I am done for the day, and that's okay as well, right? Never take for granted the money you have in your pocket. All right, so I hope that this webinar was helpful, right? I hope that you realize that pivot points are powerful, especially when you combine them with Fibonacci. You understand that there's a level of money management required, so you need to place your stops and you need to take profits as the trade goes in your favor, right? And if you're trading high volatility stocks, make sure you sell as it goes in your favor. Lower volatility stocks, your IBMs, your Googles, your Microsofts, for those, you can be a little more, I don't want to say adventurous, right? But you can take a little more risk and hold the position longer until the price hits your target. I hope you found this webinar extremely helpful. And we really want to be thoughtful about it. Probably went really deep, like looking at lows and highs of candles, so for even some of these stock trading courses that you can buy out on the web, they don't even get this granular, but we want to make sure we're helping you. If you have any questions, right, feel free to email me at admin, ADMIN, at tradingsim.com. So now it's time for the offer. So here's the Tradingsim web property. Come check us out. See how we can help you, right? Read up on our features, right? Take a look at our blog. Watch a video. You can watch this demo and see how Tradingsim can actually help you in your trading journey. And again, the key thing about Tradingsim, think of it as the DVR or the replay of the market, not a simulator, not a replay tool which just brings in data every minute or two. You can actually sit there, watch it. You can go back, look at your old trades, and not just look at them in a spreadsheet. You can pull them up in Tradingsim, hit play, see if you missed an opportunity. That's what this game is about. All right, so now the offer. As you can see here, we normally offer a 7-day trial. Okay, that's our standard offer. Well, for all of you webinar attendees, we're going to offer you a 14-day trial. Okay, so double the length. All right, so you want to go here, double free trial, password 2 weeks. All right, there you go. And here you can again get, instead of 7-day, it's 14-day. Again, the password is the number 2 and then weeks, WEEKS. So make sure you take advantage of this 2-week trial. We change our password quite frequently, so make sure you jump on it today. Thanks for your time and your attention. Again, my name is Al Hill from Tradingsim.com. Please check us out to see how we can help you on your trading journey. Good luck.
Please remember to like or share this video. To learn more about how Tradingsim can help you become a profitable trader, please visit our site at Tradingsim.com.